Sir, CV Chitle sir, you are on mute, sir.
Good morning, friends. Welcome to this cafe. As far as this cafe is concerned, it's different than the one which is going to serve you cappuccino or latte cafe. Here we are going to discuss various issues which are involved in auditing, and in that sense, you will be really energized for the purpose of conducting audit, and particularly for the purpose of reporting your findings in the audit. As you know, that in case of a cricket match, whenever there is a particular person, whether he is given caught behind,
recording in progress,
there is always a dilemma whether really the ball touched the bat or not. Umpire gives his decision, but then the spectators are also interested in knowing whether the ball really touched the bat. Now some techniques are there, and therefore we know what is the discussion going on in pavilion. So maybe something like that. Here, while the auditor performs the audit, various steps he takes out, maybe for weeks together, months, the process of audit goes on. However, everything which is conducted, all steps which are taken, small or big observations are not finding place in audit report. So now a new standard has come up, SA701, where key audit matters are required to be reported. Wherever auditor has to make some observations which bring bearing on true and fair view, or maybe regulatory non-compliances and such other matters which are statutorily required to be commented upon, are dealt with in the audit report. However, besides that, there may be discussion under certain risk factors and the matters which are relevant from the perspective of functioning of the enterprise, from the risk appetite, etc. So those matters also are required to be communicated. That is what this particular standard does. Say, for example, there is a pharmaceutical company and its dominant sales come from a particular medicine or medicinal formula, and its patent is going to expire during the current year or maybe during the subsequent year. So maybe even if whatever sales are reported, purchases are reported, profits are reported, they may be appropriate. But going forward, maybe after the patent expires and maybe number of competitors would step in, what would be the impact? Perhaps that may be discussed by the auditor. There may be other possibilities, like in case of small and medium enterprises. I'm talking of really small and medium because if they are functioning in a corporate form, they might be using various computer softwares. So whether all those computer softwares are licensed, not licensed, if they are not, maybe there may be certain observations. So these type of things which are in the periphery of the audit, but not really reflecting on true and fair view or other matters which require compulsory communication, but which were discussed during the audit. Or there may be a restaurant during the COVID period, it may not be functioning. Whatever results are there, they are reported. But what happens post-COVID, whether it is a going concern, not going concern, how it call was taken, perhaps the readers may want to know. So, friends, whether this is appropriate understanding of SA701 or not, what are the other reporting requirements, how one can modify the report, these are all issues coming to your mind. And today we have with us luminaries in the field of auditing. Our Honorable Past President, CA Mukundem Chitale, he has joined. He will be sharing his views. Welcome, Mukundem. CA Vikas Kumar, who has more than 3 decades experience in the field of auditing. So he will also share his experience with us. Welcome, Vikas Kumarji. And we have CA N. Ganesh Sampath, again, more than 3 decades experience in the field of audit. So all these luminaries, maybe within a given time of point of time, will reflect their views which will really contribute for all of us in conducting the audit and particularly in reporting. Because howsoever seriously you may conduct the audit, if the things which need to be reported are not reported, then that all process of doing audit would not be worth doing it. So reporting has to be there, reporting in appropriate manner, and certain key audit matters are required to be reported. Friends, along with me, there is former chairman of Pune branch, CA Samir Ladda. Since I'm traveling on a highway and I will be passing through Ghats section, it is possible that maybe my connection will get disrupted or maybe disconnected. So I thought it appropriate also to ask Samir to join so that he also can carry on this particular webinar so they seamlessly. So this is one key audit matter or key matter which I am communicating with you. So Samir, now it's over to you. Maybe you can take over and let us have introductory observations from these experts, and then we will have a round of discussion. Over to you, Samir.
Thank you, Chitra sir. Good morning, all the participants and the dignitaries on the screen in the audience. Welcome. We are called as a partners in nation building, and the whole country believes us on our audit and takes the decision on the basis of our audit. So it's our moral duty to do audit in the best possible way and with best qualities. And it's really a great pleasure that we have very senior chartered accountants to guide us on this quality of audit in quality CAPE session, third session today. I welcome you all on this third session of Quality CAPE on initiative of the Center for Audit Quality of the ICAI of India to talk on the various factors that affect audit quality. I thanks the convener, C. Durgesh Ji Kabra in absentia, and C. C.V. Chite sir, Central Council member, for giving me opportunity to moderate today's session on audit reporting. Audit report essentially involves 4 types of opinion: the clean or the unmodified opinion, the qualified opinion, and the adverse opinion, and the disclaimer of opinion. To share their views on the various types of opinion, the attached responsibility attached, the impact of reporting in the changing scenario, we have 3 speakers and panelists today: CA MM Chitra sir, CA N Ganesh Sampath sir, and CA Vikas Kumar sir. I will like to introduce our today's first panelist, CA Mukund M. Chitra sir. Mukund M. Chitra sir is a past president of ICI and currently serving as an independent director on various reputed companies. He is the former chairman of National Advisory Committee on Accounting Standards, a committee constituted by the Government of India, former member of the International Auditing Practices Committee of the International Federation of Accounts. He has over 4 decades of experience on advising companies on their business and financial strategy matters. I request MM Chitra sir to kindly give your views on this. I welcome you, sir. Over to you, sir. Mukund Chitra sir.
Thank you. Nice to be a part of a program called Cafe Audit. I think nobody ever thought that the audit can be as interesting as talking on a cafe venue when there are more other things to be talked about, but fine. I think it's a good introduction of the subject by the Institute. Thanks for inviting me to be here. Another thing is, this is a novel idea where there are 3 people who will take, let me say, slightly different perspectives and bring out the real issues out of the matter. Because when we are talking on a program of the Institute, and that too on an audit report, one need not keep on saying that the audit report is important. I think it's an obvious thing. So audit report is important, the relevance is there, contents and packaging, everything is important. So I think let me begin the subject by saying that I'm happy to be on this forum, expressing certain views on the relevance of the audit report. And there are 3 of us who are going to speak on the subject. So, we can gain a different perspective on the matter. As per the program, I think I have been given a subject where it is stated that views on the importance of audit report from an industry perspective. I think that's the subject which has been given to me. And therefore, let me talk or rather cover the entire subject from that perspective. Now, very frankly, when they say industry perspective, I must start with a clarification or a key matter first, saying that I am in practice, but having sat on the boards of various companies for last good period, the perspective that I get sitting as a director is what will come out of the next 10 to 15 minutes that I'll cover the subject. In the course of this, let me assure my colleagues on the panel that I am not trying to be critic of audit report, etc. But occasionally, if something comes out, this is not a critic, but this is what I hear from my colleagues on the boards of various companies and from people who manage the business. That's how they look at it at the audit report. I think that's the perspective that I would come up with. First point is, I think as far as the audit report is concerned, there are, you can say, 2 or 3 levels at which it is looked at. One is the operating management, then the board of directors, and then the shareholders. In real life, very rarely at the level of shareholders, I've seen discussions happening on the audit report. Conceptually, many of you have attended general body meetings would know that it is taken as read. And sometimes even if there's a qualification or anything, there is hardly anything which gets discussed in the general body meeting. But that's what it is. When you come to the board and the operating level management, I think these are the 2 levels at which it gets discussed absolutely properly. Naturally, at the operating level, maybe at the level of CFO and various other levels, that will be discussed threadbare. At the level of board, when I say it is the audit committee and the board, more or less in very large companies, it's only the audit committee which discusses this. But maybe in medium and small size companies, even the board looks at the audit report. Now, that's the perspective with which let me begin with. When the audit committee looks at the audit report, by and large, people try and find out, is it qualified or not qualified? That's the first usual question. And the typical answer which comes from the audit report auditor says, no, it is same as per last year, it is not qualified. Then it is like all is well, and therefore the matter goes to the next subject. I think that is how most of the audit committee meetings go on. Now, if we look at the contents of our audit report at various places, let me touch upon each of those areas and see how in different situations, the boards on which, let me say, I've experienced or I've looked at, how do they really look at it? So the first is one very good question which I had in one of the audit committee meetings from a colleague who was an absolute expert in the industry. And we were sitting in the audit committee and the partners of the audit firm were presenting the audit report. Now, at the end of the audit report presentation, the colleague of mine who was absolutely a senior person asked the auditor that everywhere you are saying to the best of my information, on the basis of information, explanations given, etc., etc. So you please tell me what is it that you have done. Now, many people start by saying that, look, this is the institute's guidance note for us, and therefore I'm reporting like this. Now, frankly, that never satisfies the board members. Because if it is the institute's guidance note, let it be applicable to the auditors. But a director typically asking a straight question that on every basis, if you are saying on the basis of information, explanations given to the best of my knowledge, belief, etc., what is the work that you have done? I think every auditor should be capable of answering this fundamental question whenever he faces the audit committee. And that's my first thought which comes to my mind. And let me jump to the latest illustration which has come in the Caro report, where under 143.12, an auditor has to report whether report under 143.12 about a fraud matter has been given or not. I was present in an audit committee where the auditors have stated, to the best of our knowledge and information, such a report has not been given. So when we ask the auditors that it is the auditors who can give such a report, and you are saying that to the best of our knowledge and information, such a report has not been given, so the board should go to which place to find out whether such a report is given or not. So while we look at the report, we should not keep on reporting matters only on a routine basis. And when the topic was discussed at length, it was noticed that the institute has got 2 guidance notes on the subject. One is on guidance note on Caro, And there is another small guidance note under 143.12, where in the introduction paragraph, it has been stated that the word auditors used under that particular section, or rather subsection, covers statutory auditors, secretarial auditors, and cost auditors. And therefore, that particular audit firm was taking a position that we know that we are not reported, but we do not know whether the cost auditors and company secretary auditors are reported or not. And therefore, naturally, on behalf of the board, we had to tell him that, look, if you want, we can give you a declaration. All our audit reports, minutes, everything is open to you. So we would request you not to report saying that to the best of my knowledge and information and according to explanations given to us. So I think the first point which comes to my mind while looking at it from an industry perspective, there are many auditors who keep on using this language without really understanding as to what is the relevance of this language in the entire reporting that we do. Now, while I'm speaking, it might appear that as if speaking against the audit per se, but I think that's not the point. The audit report is as effective as long as the reader also understands what he's reading, and it is meant for the shareholders or a common person. Audit reports are not meant for experts and technical analysts to understand that. Let them do that as best as they can. But it is meant for the shareholders. I think that's my first point. Next is when we look at the key audit matters. I know that somebody else will talk on key audit matters separately, but the way in which I looked at the key audit matters is revenue is always looked at as one of the common items on the key audit matters. Contingent liabilities is taken as one of the key audit matters. IT systems and support systems are taken as key audit matters, and so on and so forth. Many places what I find is that the language which is used in key audit matters, let's say this contingent liabilities. Now, when I read it more as a shareholder, I get an impression as if the company has pushed everything into contingent liabilities, even where the provision should have been made. The point, therefore, is while key audit matters are important, the language used in the wordings of the work done by the auditors and the subject should be so important that the shareholder does not get an impression that things are being passed on as if there is nothing correct over here. Matters are pushed under contingent liability, even though they should have been provided for. So from an industry perspective, when you look at the key audit matters, I would say the topic should be something which is important from two angles. One is it has taken a lot of time for the auditors to look at that. Possibly, I think that's one thing which the auditors keep on saying. And the risk is higher. When you look at the report on the IFC, internal financial control, I remember at one place in one of the board meetings, again, some other stalwarts in the industry had asked the question to the auditors that, look, we have appointed you to tell us whether everything is all right or not. And you are saying, based on the report given by us, you are saying controls are existing. Now, how do you handle this delicate situation? So as an auditor, again, to say that our institute has guided us to do that is not sufficient. We must understand as to why this is happening, why such a report is called for, and that's the basis on which the report has to be given. One more small point which I can make a mention at this level is, if you look at the wordings of the section 143, particular subsection 3I, somewhere in 14, it was talking about internal financial control. Then as far as the audit report is concerned, it came to financial control on financial reporting. That means ICFR and IFC, that's the usual words that we use within audit profession. So as far as the audit report is concerned, I think the auditors are expected to report on ICFR. And as far as the management is concerned, they are reporting on IFC. Now, this distinction, unfortunately, as of today, even in some of the audit reports that I read more regularly, do not seem to have come out. The directors are absolutely responsible for the entire IFC. As far as the auditors are concerned, from 2018, the reporting requirement has come on ICFR. That means on financial statements reporting, controls existing on such reports. Now, this nice, fine distinction between the two aspects has to come out of the IFC report unfortunately, since occasionally the reports get copied from last year to the current year, the problem is that the wordings are not really looked into by the person who signs the report, and there can be difficulties in the future as far as this aspect is concerned. So I thought talking within the group of chartered accountants on the forum of the institute, I thought of making a mention of this. The next point is about a few other aspects which are relevant with the audit report, and I think then I'll leave the floor to the next speakers. You know, all auditors take the management representation letter. Now, at how many places in the companies such management representation letter is actually looked at by the audit committee or the board? Forget about the audit committee, at how many places even the chairman of the audit committee really looks at it, and how many places the auditors insist that the MR letter should be looked at by the chairman of the audit committee. Because unless the topic is really understood, it is not sufficient just to take a representation, and merely because the management representation is obtained, it does not become a sufficient saving grace for the auditors to either depend on or accept certain things. Now, without taking names, I would say as of today, that has come out to be the position in view of various reports which are available in public. And therefore, the short point that I'm trying to make is, as an auditor, when auditors give the draft of the management representation letter, do they really request the audit committee to have a look at it? Do they try and ensure that positions which are taken in the management representation letters are something which are consistent with the positions taken in the financial statements and so on and so forth? At very granular level, I always found some few differences in these two areas, and that does create difficulty. Maybe initially it appears to be a difficulty for the management, but actually it will be always a difficulty for the auditors at the end, because he is supposed to be an expert on the subject. One more key point I'll like to make a mention over here, and we can take it as a discussion subsequently. After 2014, it is the board of directors who are responsible for the financial statements. Prior to 2014, it was the management which was responsible for the financial statements. And still, why do we call it as a management representation letter? That's an area which I always try to raise at different points, but somehow there has not been a concrete answer from a technical angle. Actually, now it is the board which is responsible for the preparation of financial statement. We proclaim that through the law, we proclaim that through our report. And again, the same point, if reports are taken from last year to the current year, there might be difficulties. But if somebody looks at the drafting of a report, the first is the management responsibility, then the auditor's responsibility. And in the management responsibility, we are expected to state that the board of directors is responsible for the same. And I think that's how most reports start the language. If that be the case, then under the auditing standard, why do we still call it a management representation letter? I think since I am talking on a subject of Center for Audit Quality, I thought of raising a few fundamental questions which need deliberations at the level of the institute to consider certain nomenclatures that we are using in the auditing techniques and our letters, which might look at a reconsideration or a rule look. I would say that this has to be a board representation now in view of the changes in the Companies Act in 2014, that now it is not the management, but it is the board which is responsible for a preparation of financial statement. I think this was a cafe, and therefore one can't spend time which is more than what is allotted to the person who is taking a coffee. The next person is waiting for the table to be cleared so that he can come and occupy the chair. And therefore, from that angle, I think let me state that the topic which was given to me was importance of audit report from an industry perspective. As I stated, the importance is very much, but it all depends upon the contents of the audit report. And while I gave my comments, I think they were more from the viewpoint of a board member or maybe audit committee chairman, member, etc. And what are the things which are normally found to be problematic or issue oriented in the audit report. I thought, let me make a mention of that. It is very clear that the audit report is extremely important. Audit report carries a lot of weightage as far as the company is concerned. And therefore, the auditors will have to be very, very careful in terms of the language which is used in the audit report. And the last point is the representation made. That means those in charge of governance, the representations which are made by the auditors. There have been many audit firms which absolutely very properly make representations, etc. And they have to ensure that what is contained in the representation is in line with what is given in the audit report. There are occasions when there are certain aspects mentioned in the representations, management letter as they call it, but slightly different in the audit report. Now, let me just take a last point, which was my experience just last week, and that's where I'll conclude. In one of the presentations made by the auditors where I was sitting as a director, one of the audit firm pointed out that this is the limitation on our audit. And that was included in the slide. So when I asked him what is the limitation on the audit, they said, "No, we do audit on a sample basis and therefore that's the limitation." Now, typically my question to the audit firm was, is there any way by which we can remove that limitation? An audit report is given by the auditors to the management, that is the board, and the board will naturally give its own views, and the report is meant for the shareholders. Now, if the auditors say that this is a limitation on audit, as a management, as an audit committee, as the board, we need to ensure that the limitation is not there. If the limitation is there, then there can be problems in the ultimate analysis if you look at it from the regulator's angle or outside angle. Now, there is a good amount of discussion between the auditor, partners, senior partners, and the audit committee members. So I requested them that, look, the technique of audit is something which the institute has laid down, and therefore the auditors are free to follow that. But if you call that to be a limitation, then I think you need to please relook at the matter. Because the auditing standard themselves say that after sample testing, if you find a problem, you can extend your sample till you are satisfied that what you expect is seen by you or the problems are seen by you. So if you try and communicate to the board that the sampling is our limitation, why should the board accept that proposition? I just thought, again, the program being at the level of Center for Audit Quality, let me make a mention of this latest experience over here. Thank you very much for the opportunity given to me. I'll enjoy listening to the other two speakers and thereafter certainly participate in the common question answers that would follow. Thanks a lot to everyone for patient hearing. Thank you.
Thanks a lot, Chitra sir, past president of ICI. Thanks a lot for your views on this. Now I will like to introduce to the second speaker, CA Ganesh Ji Sampath sir. CA N Ganesh Sampath has been in audit practice for over 30 years. He is a partner with large firm and he has been involved in various projects of ICI. He is a member of the group of development of National Framework for Audit Quality. He has been speaker on ICI forums in the past. He has a vast experience in applying Indian auditing standards and ISAs, International Standard Auditors. Welcome, sir. Let us hear from you now. It's over to you, Ganesh, sir.
Thank you. Thank you. Can you just confirm if my audio is clear, Mr. Samir?
Yes, sir.
Yeah. Okay. Thank you. Thank you so much. I'm really very thankful for this opportunity to be part of this esteemed panel. And I think we had a wonderful, last 15 minutes from our senior colleague, Mr. Mukund Chitale, who is not only a very senior auditor, but now also, on the board of various companies. So he provided us a very unique perspective, which covers both the our lives as an auditor as well as the expectation when he sits on the other side as a director. And I think this is very, very valuable, and we would look forward to more such inputs from Mr. Mukund Chitale and others like him in the industry to up the game from an audit quality perspective. So I'll dive straight into the topic that has been allotted to me, which is on key audit matters. Again, very thankful to speak on this topic, which is I think the new kid on the block. This key audit matters is covered by SA 701. So what I propose to do, I think SA 701 is quite exhaustive in terms of describing what the key audit matters is and how one goes about determining, reporting, documenting, etc. So I will try to encapsulate over the next 10 to 12 minutes some of the key aspects of SA 701. And in that itself, I think we would be able to cover significant ground. And I will try to also introduce certain practical examples along the way as we speak on each of these aspects. So not only do we have an SA 701, but the ICAI has also issued an implementation guide, which contains more than, I think, almost 40 question answers, which provides very, very useful, insights into, how the standard is required to be applied. And the standard became mandatory for accounting periods commencing on or after 1st April 2018. Broadly, to speak on what is the objective of key audit matters. So I think on the back of the financial crisis, what most people found is that there were many institutions that fell by the wayside. There were a lot of difficulties that they, faced, while some survived. But one striking point that many observers had was all their audit reports looked exactly similar prior to the crisis. So, readers were not able to distinguish between, what difficulties could auditors have had in, auditing institutions which ultimately collapsed or those that survived. And then that actually led to this, this thing called the key audit matters. So what exactly it is? It is, amongst the matters. So the broad description of key audit matters is amongst the matters the auditor communicates with those charged with governance. It is those matters that in the auditor's judgment, professional judgment, were of most significant in the audit of the financial statements for the current period. Now, this is the simple definition as per SA 701. But the real, the crux actually is in how do you determine this? It's easy to, maybe set out a broad, concept. What SA 701 says is that from out of those matters that auditors communicate with those charged with governance, of course, that is covered by a separate auditing standard, SA 260, which is revised, which sets out what are the different matters that auditors are required to communicate, which include certain, basic aspects like even information, like, confirming whether the auditor is independent and, confirming, what is the scope of the auditor, and going on to then determining, communicating what are the significant risks identified by the auditor and how the auditor address those risks as part of his audit, so on and so forth. So from out of all those matters, the key audit matters are those which are said to have received significant auditor attention in the audit. And if you look, go to the next layer, if you see what could be those significant matters, the standard says that those could be out of matters where a higher, risk of material misstatement may have been identified, or a significant risk in terms of SA 315, including a fraud risk may have been identified. And what we would, the standard also goes on to say is very often, these matters involve areas where there is significant judgment applied by the auditor in reaching their conclusion on whether or not the financial show a true and fair view. And very often than not, those also involve those areas where management applies significant judgment, including accounting estimates, and which are sometimes characterized with the high estimation uncertainty. So, as you can see, so these could be, loosely defined as areas which are more difficult to audit compared to, the other areas that an auditor would normally, do. So having looked at the definition, the question then is, how do you, now there may be various such matters. How do you choose which matters to report on? Here again, SA 701, talks about areas which are relatively most important. So there is this is not an absolute determination, but it's a relative determination. So in an audit, if you have a number of matters, so relatively which are most important, those become, matters that could be considered for CAM. The other factors to consider is where external users have expressed interest in certain aspects of the financial statement. That also could be a factor. The audit of those areas could be matters of, could be key audit matters, which for the sake of simplicity, I may refer to as CAM. And the other factor, which the standard says, is the nature and extent of communication with those charged with governance. Namely, matters where the communication with those charged with governance have been more in-depth, or have been more frequent, or have been more robust. Those could be matters which are, could be considered as key audit matters. So this hopefully gives a very broad understanding of what a key audit matter is. So, coming back to the purpose, right? Now, so if you look at from a definition point of view and the context, the precedents which gave rise to the key audit matters, what does this key audit matters do from a reader's perspective and from an auditor's perspective? Basically, it improves the communicative value of the auditor's report. The auditor's report has traditionally been looked like a traffic signal kind of a thing. Namely, it's either a green or a red, right? So either it's a clean opinion or it is a modified opinion. Sometimes you could have an emphasis of matter, which doesn't really change the character of the opinion. But these are the ones that we are used to. So the key audit matters goes beyond that and gives some flavor and color in terms of what could be some of those areas which could provide a better understanding to the user in terms of what are the key ingredients into the financial statement by way of judgments, estimates, so on and so forth. They may also provide a basis for users to further engage with management. For example, if an auditor has described a particular matter as a key audit matter, those like we have seen these quarterly earning calls that management do after declaration of results. The analysts often ask a number of questions. So key audit matters could become a basis for analysts, users such as analysts as well as shareholders, to ask further questions of management to improve their own understanding of these matters in the financial statement. So overall, it is aimed at improving the understanding, if not the appreciation, of certain critical matters in the financial statements. One of the important aspects of SA 701 is that it clarifies that the key audit matter is an additional responsibility. It is not a substitution for a, I'm sorry, I'm having a power outage, so hopefully you can still hear me. So it's not a substitution for a qualified or a modified opinion, whether it be a disclaimer or it be a qualification, or a reporting of a material uncertainty relating to a going concern issue. So a CAM is not a substitute for this. This is in addition. This is an additional responsibility, and it's an additional responsibility of communication. It doesn't change the way we audit, but changes the way we communicate in the auditor's report. And what does it apply to? It applies to all general purpose financial statements of listed entities. Secondly, it could also apply where the auditor decides in certain circumstances to communicate key audit matters, although the entity may not be listed, And thirdly, it could apply where a law or a regulation requires such a communication, even though that entity may not be a listed entity. So these are the three circumstances that the standard stipulates the for application of the key audit matters. The standard also says that the communication of key audit matters in the report is prohibited when a disclaimer of an opinion is issued. Unless, there is a law or regulation that still requires such a disclosure of key audit matters. Next, we move on to, having determined what is a key matter, how is it communicated? So per the standard, it is required to be communicated in a separate section of the audit report, and which is titled as key audit matters. And what do we need to communicate there? So number one, we need to communicate that it is the auditor's professional judgment. And, there's a standard language that it has prescribed to give a preamble to say that this is, based on the professional auditor's judgment, matters that were considered as most significant in the context of audit. So this is the common, this is the mandatory verbiage that has been prescribed as a background to the key audit matters. But the second part of the key audit matter is for the auditor to describe in his own words as to why the matter was considered to be most significant and hence a key audit matter. Number one. Number two, how the matter was addressed in the audit. And number three, the key audit matter should also make a reference to any disclosures that have been made as part of the financial statements regarding that matter. So the important thing here is that one needs to be very specific. This is an opportunity for the auditor. I think if I can take a step back, more than an additional responsibility, I would say it's an opportunity for the auditor to really showcase and communicate out to the users of the financial statements the areas where there has been significant judgment and how the auditor has been able to audit those areas. So I think we should, as a professional community, it is at least my opinion that we should use this as a good opportunity to showcase those areas. And therefore, it's also important that we don't convert this into another boilerplate kind of a thing, which used to happen with our regular audit report. If everybody starts reporting in the same language, I think it will cease to, get the, real effect of what it is meant to be. So I think individual auditors should customize the key audit matters, even if they are the same type of matters. For example, revenue recognition. Two revenue recognitions, if they read exactly the same, people will then start again, complaining that auditor's report look like boilerplate, kind of templates. Okay, there are also situations where key audit matter need not be communicated. That is where a law or a regulation prohibits such a communication. And in very, very extremely rare circumstances, where the auditor determines that the adverse consequence of communicating this matter would be more than the public interest benefit of doing such a communication. So this is very, very judgmental. And I think if any auditor gets into this territory, I think one must be very, very careful. It cannot be, applied, in a matter of fact manner. And I think there has to be considerable consultation and, assessment before one reaches this particular conclusion. I think I have covered the key aspects of SA 701, which also talks about other matters. For example, documentation, etc. So which are more a matter of detail. But very quickly, I would say, as part of documentation, there are three important elements that the auditor is required to capture. One is the rationale for determining why something was a key audit matter, and the second is for determining if the auditor determined that there was a key audit matter, but those were not required to be communicated, then again documentation of that is required. The third is wherever there has been a modification in the auditor's report, either a qualified opinion or an adverse opinion. Normally, such matters could be also key audit matters. In such cases, the auditor does not communicate those in so much detail under key audit matters. The basis for the qualified or adverse opinion captures the reasons why that modification has happened, and the auditor then cross-refers it under the key audit matters. I think broadly with that, it covers, I have covered the key aspects that are covered in SA 701. Again, at the cost of repetition, I would say that as an auditor community, we should look at this as an opportunity to, really showcase to the users of financial statements, which are those areas where we would like to, give them insights into the audit process, which they have always complained that we do not get. and we should invest our time and energies. We are still at the infancy of this particular thing, and I think we should also gain experience by reading international audit reports, because this is not just in India, this is across the globe. This is from ISA 701. So I think as we gain more and more experience, I think we can make a very useful contribution from a user's perspective of the financial statements. I just stop there, and happy to later on take any questions as part of the discussion panel on this. Thank you.
Thank you, Ganesh sir. That was a really wonderful insight on the key audit matters. Thank you very much on behalf of all the audience. Now, I would like to introduce our today's last panelist, Vikas Kumar sir. Vikas Kumar sir is a qualified chartered accountant and with more than 30 years of post-qualification experience. He's a partner in mid-sized firm. He has extensive experience in statutory audits, bank audits, forensic audit, monitoring audits, business advising services, etc. in various industries. He is specialized in the financial services sector and has also conducted various work on behalf of various regulators. He is a regular speaker and panelist also at many conferences and seminars of ICAI, SEBI, CNAG, etc. on various topics including Ind AS, Companies Act, bank audits, forensic audit, accounting standard, etc. He is also a technical reviewer, quality review board constituted by ICAI and Government of India. I welcome Vikas Kumar sir on behalf of all the participants. Sir, we are eager to hear you. Over to you, sir.
Thank you so much, Sameer, for your nice introduction. I hope you all are able to hear me properly and clearly. So first of all, my thanks to Sameer and good afternoon to everyone. My sincere thanks to Center for Audit Quality of ICAI and Sir Durgeshji Kabra, convener of CAQ, for inviting me here as a panelist. It's actually my privilege and honor that I'm sharing this virtual dais today with such a distinguished and esteemed panel. And we have heard both our panelists before this. And in fact, some of the very relevant issues have been told by Mukund Chitleji. In fact, I'll request this whole panel that if we can discuss on some of the practical things once we complete on all these questions and other stuff, maybe we can discuss some of those practical things which have been raised as to how as an auditor we need to evolve ourselves and take the things forward. Friends, as it was being told that this is in a cafe, though it is not a cafe where we are having coffee, but since we are on a virtual panel, on a lighter side, we can enjoy our coffee also, along with this discussion, which is more of a technical and other stuff as to what we are going to do and how we are going to do. But let's enjoy this with coffee and let's enjoy our discussion. And thereafter, whatever other question answers, we can do that. I have been told to talk on relevance of matter of emphasis, other matter in the auditor's report. That is what I have been told that I need to talk about. And as you all are aware that this is actually driven by Standard on Auditing 706, which is revised and effective from 1st of April 2018. So this SS 706 is something which is most relevant and important so far as the matter of emphasis and other matter is concerned. Broadly, to talk on the relevance, that whether it is actually relevant and how this is actually useful for the people at large, not only to the people auditors, but actually for the reader, because it is meant for the reader. So how does it is helping? That is the most important thing, and definitely it must have been seen, and that is why there is a requirement. I also feel and believe that that the emphasis of matter in audit reports has significantly increased over last few years. Earlier, we might not have been seeing much of them, but nowadays, at least we see many reports where the EOM is given or other matters are given. So it is gaining more popularity and it is becoming more and more useful and understanding actually. I also personally feel that though this requirement was there for long, but now the awareness, whether we need to give an EOM, whether we need to give another other matters, the awareness and understanding on the same or for the requirement of giving EOM and or other matter has been increasing, and in my view, this is very relevant as well, right? So why this emphasis of matter or other matter is given? It is actually given to draw the user's attention when in the auditor's judgment, it is necessary to do so. And it is by way of a clear additional communication in the auditor's report. So we are doing various other communications. We are giving a qualification, a disclaimer, a CARO report, an opinion. But this is an additional communication which is actually driven by this SA 706. So this is not something which is getting merged with others, but this is an additional communication where the auditors feel, or their judgment, they think it is necessary that this is something which is important as per the requirement of the standards on auditing. Now the question is why it is so important or why it is so relevant. I think that there are a number of disclosures in the financial statement. Nowadays, it's so bulky, so many pages, so many disclosures, so many notes to the accounts. Many of them are very routine ones. Some of them are relevant to certain users of the financial statements. And some of them are actually very important and critical. Now, for a common reader to actually go through the entire financial statement and understand which are the critical ones or which is something which they need to focus more, is not easy. It is actually challenging. And it is not only challenging, it is time consuming as well. Because to go through the entire detailed thing and then to understand what is relevant is not something which is easy, right? So that is, in my view, the prime reason that there is this concept of EOM or emphasis of matter, wherein the auditor is highlighting something which is actually critical, which is actually relevant for the users. And then the user need not just go through the entire financial statement and find out that what is so important and what is so critical, but by seeing this EOM in the auditor's report itself, he will come to know, or he or she will come to know that what is there. Right. So that I think is the main purpose of having the EOM in the auditor's report. Now, if we keep on just referring anything and everything, I think it will not serve the purpose. So we have to see to it that whatever we are referring is something which is relevant, which is actually required as per the requirements of standard on auditing. In fact, the standard on auditing talks very clearly that in which case you have to give emphasis of matter. So we have to be very clear into it. Like if I have to tell, as per the standard on auditing, it says basically that this paragraph included in the auditor's report refers to a matter appropriately presented or disclosed in the financial statement. So please remember the first thing, this is already disclosed or presented in the financial statement by the management itself. But this is something which in the auditor's judgment is of such importance that it is fundamental to the user's understanding of the financial statement. So management is already giving it. But since, as I was already telling, it's such a large financial statement and so many pages, and this item is of such importance that it is fundamental to the user's understanding of the financial statement. If there is anything like that, then we have to give this emphasis of matter. We have to keep our mind very clear that yes, when I am giving and when I am not giving. Similarly, like EOM was one. Similarly, for other matters, that is again an important thing and which is becoming very relevant nowadays. In this case also, the standard on auditing is very clear that when you have to give it. Like in the case of EOM, we were giving when it was actually presented or disclosed in the financial statement. Whereas in this case, that is other matter, this is such where a matter other than those presented or disclosed in the financial statement. So this is not something which is disclosed or presented in the financial statement. So this is other than those presented or disclosed in the financial statement that in the auditor's judgment is relevant to the user's understanding of what? Please listen to that carefully. Of the audit, the auditor's responsibilities or the auditor's report. So if the auditor wants to communicate something which is actually not there in the financial statement, but the auditor wants to communicate to the world, to the reader, that look, this is how my understanding of the audit is. This is how my understanding of the auditor's responsibilities is, which is something different from what is there already given in the normal norm. So that is what is something which is coming in the other matters basically, right? I hope I'm clear so far and I'm able to communicate what I want to, right? The relevance and the importance of EOM or of the other matters is increasing day by day. One another reason which I feel that today the financial and accounting world is changing and changing rapidly actually. And even at the micro level, the quantum of data, the technicalities involved, this all are increasing. So new things are emerging, new thoughts are emerging, new techniques are emerging, new disclosures are happening. And many of them are very complex, very important, very relevant. And accordingly, if there is something which is more fundamental for the readers to understand, then EOM or OM is something which is becoming important, and it has to be given in the auditor's report, which will help to the user to understand. When to give, when not to give, it is of course a matter of professional judgment, but we will have to be very clear that when I am giving, I have to be very convinced that there's something which is important, and that's why I'm giving. Some of the items are already given in the standards also, respective standards, as well as SS706. It is already given that in those cases, you have to give it. And other cases could come wherein you have to decide whether to give or not. So some of them where the other standards are talking about that you need to give an emphasis of matter paragraph. If I have to give some examples, like when a financial reporting framework prescribed by any law or regulation would be unacceptable, but for the fact that it is prescribed by law or regulation. So in normal case, that is not something which is acceptable, but it is given in the law. So auditor can't do anything, management can't do anything. They have to follow that. Any such scenario, give an EOM so that the reader knows and understands that what it is and how it is. Similarly, if there are any financial statements which are prepared in accordance with the special purpose framework, we should give an EOM. That is what the specific requirement of one of the standards on auditing is. Similarly, like if there are any facts which become known to the auditor after the date of the auditor's report, and the auditor provides a new report or an amended report. So I'm giving a separate report, a new report. I must tell by giving that disclosure in my report that this is the new report or amended report. So these are the things which are very clearly coming in these respective standards on auditing. And SS706 also gives certain examples when the EOM can be given. One which is used very widely. In fact, that becomes very important. Chitlesa was also talking about contingent liability. So there is one specific reference given in the SS706 that if there is any uncertainty relating to the future outcome of exceptional litigation or regulatory action, in such cases, the EOM might be very relevant. If there is an exceptional litigation, amount could be material. It is difficult to understand how it will go, where it will go. In such cases, the EOM is the most important thing, I believe, for the auditor to make the reader understand and make the reader know that this is an important element in this financial statement. Similarly, like if there is a significant subsequent event that occurs between the date of the financial statement and date of the auditor's report, that also becomes very important. Early application of a new accounting standard, then when it has become mandatory, that becomes very important. Any major catastrophe has happened and you want to disclose, that becomes very important. So there are various things which are already given in the essay itself, which has to be taken. And in other cases, of course, we have to take our judgment and accordingly we have to give it. So I personally believe that this SS706 is very relevant, very important and good for the reader to know and to understand. And we as an auditor, it is our responsibility, and rather it is good for us that we are able to communicate those matters as emphasis of matter or as other. I think that's a brief on this. As and when any question comes, we'll be happy to discuss in detail in the nitty-gritties of even on EOM or OM. So that's a brief summary from my side on this.
Thank you, Vikas Kumar sir. Now let us have some questions for our panelists one by one. I will read out for the speakers one by one. We will start with MM Chitlesa. Sir, how do you think inclusion of key audit matter, that is CAM, adds value to the users of financial statements?
I think it was just now explained about what the key audit matters are, and therefore, in short, a few years ago, the audit report was found to be too stereotyped, and therefore the people at large used to say that, look, we don't get some meaning out of the audit report. And I think that's the angle from which the key audit matters are becoming areas which, in a nutshell, can communicate to the readers issues that one can look at. I think those old timers who are around, they would remember that earlier used to be called as attention is invited to so and so. That attention is invited is now in a different language called key audit matters. So I think it, in a summarized form, gives the areas that one should look at, prominent items. I think that's it. Thank you.
Ganesh sir, what are the considerations that needs to keep in mind while making such CAM, inclusion or exclusion? You're on mute, sir. Ganesh sir, unmute yourself.
I'm sorry. I had broadly covered it when I had set out, but just I could quickly summarize. So basically, the key considerations would be, first of all, the key audit matters would be those that are arising from communication with those charged with governance. Of course, there are a number of matters that we communicate, which is governed by SA 260 revised. Out of those, it is the auditor's judgment to determine which are the most significant matters. And generally, we have seen that those matters are associated where there is a higher risk of material misstatement, or where there's a significant risk identified as per SA 315, involving, estimates and significant judgment, management judgment, and estimation uncertainty. So I think out of this, the auditor has to make a judicious, decision as to which matters the auditor requires to communicate and how he wishes to communicate.
Are all significant risks considered to be CAM, Ganesh sir?
So no, our answer would be not necessarily, actually, because if you see from a SA 315 perspective, significant risk, there are at least two significant risks. One, there is a presumed risk of revenue, presumed fraud risk on revenue, as well as there is a presumed risk of management override of controls. Now, the auditor obviously needs to respond to these risks, and the SA also states that the auditor could determine in certain circumstances and rebut the risk on revenue. So therefore, it depends on whether there is significant uncertainty. If I can just take an example, in the case of a regular trading or a manufacturing company, where customers take delivery of goods at the gate of the company's factory, I would say there would be less significant risk and less time spent by the auditor compared to a software industry, where, let us say, revenue is determined based on the percentage of completion method and the contract is incomplete, and there is significant estimation involved in, let us say, the cost to determine the revenue. So, in the second situation, perhaps it would be key audit matter. The first, it may not be. So I think the answer, yeah, I go back to say it's not necessarily. One has to make a judgment.
Sir, what is the effect, if any, on CAM previously communicated in the auditor's report in circumstances when the auditor reissues the report or amends the report previously issued?
So I think it gives rise
to only to continue. Yeah, please continue.
Okay, so sorry, I just took that question because it was related to CAM, but happy to have your inputs also, sir.
I was saying the same thing, sir. I was saying the same thing. Please continue.
Thank you. Yeah. So, I think there could be three situations from where there is a, auditor's report that has been reissued. One is, let us say, a matter was earlier part of the CAM, and the reissuance has nothing to do with that particular matter. Then obviously the CAM relating to the other matters remain the same. Second is, a matter of CAM is the subject matter because of which it is being reissued, let us say, right? Some fact became known to the auditor after the, after the, financial statements have been issued, and therefore the auditor performs additional procedures and then reissues his report. In that situation, if that matter was previously a part of the CAM communication, the auditor now needs to consider what additional, matters he needs to communicate as part of CAM, because he has already determined this matter to be a CAM, and there is a change in that matter. The third is a situation where the reissue is arising out of a situation which was not previously part of CAM. Then the auditor needs to determine whether the matter is significant enough for him to include as CAM. And in many situations, the auditor will come to the conclusion that maybe it is so. So in that case, the auditor considers the additional communication in CAM. So there could be situations where there may be no change, But in many situations, there could be changes, and the auditor has to consider the revised, facts and circumstances in the communication of CAM. I hope that answers the question.
Okay. Vikas Kumar sir, do you agree that a widespread use of emphasis of matter paragraphs diminishes the effectiveness of auditors' communication of such matters? What all should be kept in mind while including an emphasis of matter paragraph in the audit report?
Okay, I'll actually like to put it differently. The issue is whether an emphasis of matter is required to be given as per the requirements of a standard on auditing or not. If actually it is required and it needs to be given, then whether it will result into widespread or not, to my mind, it is not the point. So if it is required to be given, it is required to be given. If it is not something which is required to be given and unnecessarily I'm giving, then it creates an issue, right? So if it is something which is required to be given and the auditor is giving it, in fact, in my view, it is enhancing the effectiveness of the auditor's communication. That is the whole purpose why it is being done. So this is adding value to the entire audit report. Whereas, I mean, as I was saying, that in case if any auditor is giving EOM just for the sake of giving, or it is actually not warranted, then naturally there is a question of excessive communication or diminishing the value of the auditor's communication. This is actually a matter of judgment. I mean, in every case, everybody will have their own judgment in their view, whether it is to be given, warranted, not warranted. And those judgmental issue will keep on happening, not only in EOM or OM. There are many matters in which those judgments will have to be done. If there is any such scenario, for me, I mean, the fundamental rule is that if I am reasonably sure that this fits in the requirement of the standards, this is something like for EOM, it is a right item to give. I am satisfied, I am reasonably sure I'll go and give it and not bother about what others are thinking and accept whether it will result into any excessive thing or how the audit committee is going to take it. So if it is required, it is required. But I will not like to give it only for the sake of becoming extra conservative or it is safer to give, so it is better to give. No. I need to convince myself if I, as an auditor, my judgment says that this is something which is important, I need to give it, I must give it. That's how I would like to deal with the same, and we have to keep in mind while deciding whether we give an EOM or not. I mean, and as I've already explained earlier, the standard on auditing itself gives various circumstances in which we have to keep in mind while deciding on EOM. So if it is fitting in, we must give it. There's nothing like widespread or anything like that. To my mind, if it is to be given, it is to be given, but not for the sake of giving.
Well, what is the responsibility of auditor when the auditor decides to include an emphasis of matter on the matter paragraph in the auditor's report, sir?
So once the auditor has gone through and they have made their mind or decided that this emphasis of matter or other matter is something which they have to include in the auditor's report. In my view, the first thing they should do is that they should communicate with those charged with governance and make it very clear with respect to their expectations and the wordings of the paragraph, what they're going to give. Generally, I feel that our focus has been that if I'm giving a qualification or there is something which is a disclaimer, then only we have to engage with those charged with governance. And this is EOM is actually not a qualification, so why I need to do that? But I think even EOM is an important matter or OM is an important matter and we must communicate. And in fact, there is a specific requirement in the standard on auditing as well that we have to do that. So in my view, that is the first thing which any auditor must do as in when they decide about giving this EOM or the other matter paragraph in the report. Now, while drafting this emphasis of matter or other matter paragraph, there are again many aspects which has to be kept in mind, and again it is driven by the essay itself. So it has been given very clearly what are the key things which you look upon and how do you really go about it. Like we were already discussing on the CAM. So if there is something which is not CAM, then it is not a matter of EOM or OM which you have to give basically. Similarly, if there is any matter of audit qualification, if there is any modified opinion in line with SA705. So that cannot be a matter of EOM. So we have to be very, very clear on that, and that cannot be given as EOM in any circumstances. Similarly, one important aspect is that whenever I am giving any EOM or the other matter paragraph, I must mention that this is actually not modified. This is only an EOM paragraph. So that should come very clearly when I am drafting my para on EOM. As I was talking, that EOM is something which is adequately and appropriately disclosed in the financial statement. So wherever it is disclosed in the financial statement, the reference of the same will have to be given in my EOM paragraph. That is again very important. A separate heading, of course, so that the reader can understand that if I am trying to communicate anything as emphasis of matter or other matter, there has to be a separate heading which gives about it. Another point which we can keep in mind is that if anything relating to SF570 on the material uncertainty, again, that is not a substitute for this. That has to be disclosed in detail separately. Overall, basically, we have to ensure that when I am referring the EOM, we are giving a proper reference, we are making the matter clear, we are explaining that where the relevant and detailed disclosures are given, and we take care of these key items which I have talked about it. So I believe these are some of the key responsibilities of the auditor once they decide to give any emphasis of matter or other matter paragraph in the report.
Chitra sir, a lot of industries and business have been impacted with COVID-19 and question the going concern. How the challenges of companies owing to COVID been different from the ones faced by them in the normal course with respect to going concern?
Yeah, I think this was a unique feature for last 3 years. And when I say this was, unfortunately, this continues to be. I think that's the bad luck for all of us that COVID again seems to be surfacing again. Hopefully, it doesn't become that serious as in the past. Keeping aside that medical aspect, look at it from the business point of view or accounting and auditing angle. I think the first year was a great shock. That means the first time when it started was a big shock because it started in March and practically nobody knew how to go about. By the time second year has come, I think more or less people, industry have got used to it. All of us who keep on reading the newspapers and reports would find that there are certain industries which have made a huge benefit out of this, like hospitality industry to some extent, the medical in certain cases. When I say hospitality, those who were able to convert themselves into adapting alternate techniques, they could make use of it. The medical fraternity at the appropriate level has been able to make use of it. The IT sector has been getting a good chunk of revenues out of it. All the remaining things, I think in the industries are concerned, they were really badly affected. The financial results do speak about it. Now, look at it only from an audit angle and accounting angle. I think those companies which had a complete automation system, including documentation being automated, really had very little difficulties. Adoption to work from home was easily possible. But I think such number of companies would be not many in the country. That means I'm saying automation, including documentation, which are automated. The next level are those where accounting system is automated, but the documentation is not automated. And that's the majority of the company, where accounting systems are ERP, SAP, and various whatnots. But every kind of document is not necessarily on documented form. I think that is where the audit profession found it extremely difficult to match with the expected situations. And coming to the going concern, I think the first reaction was that there seems to be a great trouble. But there are few industries which have really gone down completely on the basis of the effect of COVID. The accounting or auditing standard on going concern, I would say, in a way, got tested through this catastrophe of COVID to a great extent. Because if you look at the testing of going concern as given in the standards, it asks you to look at the probability of your payments in the next 12 months, the current ratio, and various other aspects. So the way in which those tests are to be applied got, I think, tested in a very good manner. And I think that was a good testing which happened, that the standards were proven to be appropriate for meeting this situation. So I think coming back to the point, I would not say only industry perspective, but from all angle, the going concern was seriously tested during this period. There have been few occasions where the companies themselves or auditors have pointed out, I won't say material uncertainties, but difficulties in ensuring a going concern. But now we seem to be getting out of this. But this is an area on which I think the views can differ from industry to industry or a person to person. That's it.
Well, Vikas Kumar sir, how has the going concern issued the COVID scenario impacted in the audit reporting?
Okay, I think to some extent it is similar to what Chitle sir was already talking. So as we all are aware that the spread and reach of COVID was very far and wide. In fact, the effects were so significant that almost everyone in one way or another got affected from the same. And naturally, the audit reporting was also not different, and it also got impacted on account of the same. And one of the most important area which Chitle sir was also talking in that was the going concern, which you are asking me as well. And COVID was impacting certain industries in a very significant matter. And some of them might had the going concern status also in doubt. And especially it was becoming more compounded during the first year of COVID, March 20, when we were doing and it struck for the first time. It was compounding because we had no understanding how it is going to behave. What is going to happen? Kya hone wala hai? That was the first question which was in our mind. We were not knowing how much time it is going to take, how much time we are going to have to shut downs, when the things will start, how many people will come back, what is going to be the result of the same. So there were significant concerns in the mind. And hence at that time to do the assessment on the going concern by the management first, because it is their responsibility to do that. And thereafter for the auditor to review whether the management assessments includes all relevant information they were aware at the time of assessment, as well as if the auditor has come across something during the course of the audit, whether they have taken care of everything and their assessment is proper or not. That was a big challenge from the auditor fraternity also. Of course, there are many items which had to be seen while deciding on the going concern. And as Chitle sir was saying that in some of the cases, it has come out very clearly as well that they are not in a position to comment. Or in some cases, it has come as a qualification. So different things has come. And many of the matters which could impact in this scenario was like impact of the measures taken by the respective governments, because many companies in India have got operations outside India as well. And there have been different impacts in the different countries, and the response by the respective governments was also very different. So what was the response and what were the measures taken by the respective governments, or what is the impact on the entities' access to the capital, or even like preparing the financial statement itself, because that was itself a challenge, at least in the first year, or delay in getting details from the respective jurisdiction, or to meet the regulatory requirements or the operational changes. So there are many matters which were to be considered while deciding on the going concern at that relevant point of time. Right, and Institute has come out very clearly with a guideline, a very timely guideline on the going concern, that what could be the key consideration for auditors amid COVID-19. And the entire work for us, for the audit fraternity, was something which was revolved around the same. So based on those limitations and understanding, the work was done, and the references were made. In fact, if you will see the audit reports for March 20 or rather March 21, it's also in most of the cases, I believe, those references were given in the auditor's report. Coming now, because things have been improving significantly, though something keeps on coming and happening, but things have improved significantly, and we have seen that even during COVID, most of the industries which were very vulnerable earlier have changed significantly, and their operations have improved significantly. So now most of the cases in March 22 onwards, gradually the references are going away. Otherwise, it was seen generally in most of the cases in March 20 and 21, and it had significant impact on in our audit process, and audit reporting and references were made. But now the things are changing gradually, and we hope and pray that we continue to do much better.
Ganesh sir, in case the auditor expects to modify the opinion auditor's report, that is SS 705 requires the auditor to communicate with TCWG the circumstances that led to expected modification and the proposed wording of the modification. Why do you think it is important? Does it was a challenge in practically?
Yeah. So I think the reason I would say this is a very important requirement apart from being requirement of the standard. The utility is that, as we know, those charged with governance many a time are not part of management. So number one, they may not be fully aware of the issues that is leading to the proposed modification in the auditor's report. Number two, because they sit at a slightly elevated level from management, which is, they have a much broader, responsibility. And as Mr. Chitle rightly pointed out, now they have now the ultimate responsibility for preparation of financial statements. It is only fair that, they be intimated in advance and in detail the reasons why the modification is proposed together with the wording. Now, what is the utility of this? I think many a time we have seen that, let's say there are two types of matters. One is those which are within the control of the entity. Let us say that there is a misstatement because management has adopted a particular approach in recognizing certain items in the financial statements. And there is a disagreement where the auditor believes that there is or they should have done it in a different way and it does not comply with the standard. Now, it is possible that those charged in governance may prevail upon management. They may have a different view compared to management, and they may then state that we should follow what the auditor is saying. But let us say they also believe that it is management view is probably more appropriate. Then maybe the modification continues. But in reality, some modifications could actually change. Result in sometimes the completely getting dropped also because the entity is willing to make the change to the financial statements, which was causing the auditor to modify. And in many circumstances, it causes some change to the audit wording because I think when those charged with governance with more experience read these modifications, they may highlight certain aspects to the auditor which he may have previously not considered. So that may also result in some change, even though the modification itself may not change, it may change some of the wordings that is proposed. Coming to what are the practical challenges, I think the challenges most of the time is the timing, right? So I think the earlier you communicate, the better it always is. Because the audit report is a very important document, and if there is a modification, a number of users would need to read it. But I think given that we are now in a virtual environment, some of those challenges are going away. But I believe the practical challenges, I don't see too many, to be honest. But happy to hear any contrary views from my fellow panelists on this. And last but not the least, whenever there is a modification, there is also, like I had mentioned previously, as part of the key audit matters, many a time, these are required to be communicated as, these are required to be referenced in the key audit matters, and the reference is made to the basis for, either the qualification or the adverse matter. You don't need to repeat the whole thing and provide an auditor's perspective as to why it is a key audit matter. I hope that answers the question, and happy if Mr. Chitle, I think, has an additional point.
Can I make now, since this is a panel, it's an advantage to share something more. I think that's all. You have practically covered everything.
Absolutely.
I think 2 or 3 other points which come to the mind. Number one, if finally the point remains under the qualification, the directors are expected to respond to them in the director's report. So I think they need to know what is the modification, and therefore I think that's the first requirement. Secondly, look at it from a director's point of view. Many times it is the management which should have first discussed, talked to the auditors about why such a modification is required, and if that has not been able to successfully eliminate that, then only it really comes to the director's level. So the earlier it comes to the knowledge of the management and then the auditors, it is essential. The practical difficulties are many times from the audit firm's angle. The level through which the audit happens, at the operating level, there are issues which are brought out. The manager level or the partner level, the issues do get crystallized. And some senior person would say, no, this topic is too serious and therefore we need to qualify. Now, such a call or such a decision many times gets taken only at the end. And therefore, there is a little time kept between the senior most person deciding that this is a matter which needs qualification and that matter getting communicated to the client. I think that's the practical difficulty from an audit firm's angle. And that is where all of us who work as auditors will have to look at our own organizations to see how this issue gets solved out quickly. Thirdly, if you talk about a listed company gets presentation on a quarterly basis from the auditors. Now, it cannot suddenly happen that in the fourth quarter, suddenly something becomes a matter of qualification when it was not even a reference point in the earlier 3 quarters. I think that's a matter which has much more important, because in business, nothing emerges so suddenly that something was not relevant at all in the presentations made to the board or anybody in the past, and suddenly a topic becomes a matter which is worth modification in the end. Therefore, while an audit firm tries to say that, look, this is a modification, I would say it's really a challenge that how do you identify that modification item? How do you communicate that? And then how do you convince the directors that it is absolutely necessary for them to qualify the matter? Because actually it's not just a choice, it's an obligation on the auditors to convince the directors that it is necessary. Because in real terms, it is only when the auditors are in active disagreement with what the management is doing that the modification would come in effect. I'm not trying to discuss in detail, but I think it is that kind of situation. And therefore, the planning exercise in the audit firm absolutely brings itself to the very important level while talking on this subject. That's all.
Well, Chitra sir, the next question is for you. The audit report includes a section on the auditor's responsibility, under which an auditor is required to state that the audit has been concluded with the standards on auditing. What is its significance, as a lot is left to professional judgment? Are there any consequences in the case auditor fails to carry out any procedures laid down?
On a lighter side, can I know how many people are participating or attending?
Sir, here cannot be seen exact. I think
no, I'm not saying seeing the face. At least can we know the number?
Maybe Ruchika can tell us. Renu.
See, the point is not that is going to make a difference. Yeah, please.
Ruchika, is it possible for you?
I think
or anybody from
Protect team can tell. I mean, there's somebody from Protect support. I think they can surely tell.
See, I think let me proceed with the answer. Not that it makes a difference for me while answering whether 2 are attending or 200 are attending. Not that way. But then one should understand: is it a coffee table where only 4 are sitting and chatting, or is it a program where there are few others who are listening? Whether 2 or 200 is not a difference. Now, let me come to the point straight. If you look at the audit report about 20 years ago, it did not include this paragraph about auditor's responsibility. I think this was changed somewhere in 98, 2000, etc. when this current report in a different format came into the place. First point. Secondly, on a lighter side, this is the first reminder to the auditor that when you are giving the report, you are expected to follow all these standards. So it's a self-reminder to all of us who are signing audit report that I am supposed to follow the standard. If we look at the standard report which is given, it gives about 4 or 5 paragraphs in which we are in a summarized manner writing what is it that we are doing. And that is why I go back to my first illustration, which I said when I make my first presentation, that in one of the companies where the auditors made a presentation, they brought out limitation on audit. So as a director, when I questioned them about the limitation on audit, the person answered to me saying that the audit is done on a sample basis. Now let us test our standards on auditing on sampling. which very clearly tells us how to select sample, etc., etc. But at some other place, it tells us that the observations arising out of sampling are disturbing, or you feel that they are problematic, then we have to increase our sample till the time that we get satisfied that the controls exist and there are no difficulties. So sampling cannot be called as a limitation on audit. Now that can be a good point for discussion between the auditors to say that, look, it is automatically a limitation. But look at it from the company's point of view. I think that's the perspective which the directors would carry. So while coming to the point is that the standards of auditing are always a good reading material for everyone. The implementation of it is always a problem area. Secondly, the measurement techniques for implementation are really not available, except the peer review or quality review board which looks at our audit working paper file. Now the audit working paper file typically can be created within the next 60 days from the date of the audit report as per another measure. Now, consequently, therefore, the importance of saying that these standards are followed is purposely brought into the report so that all of us who are writing the report are in a way self-reminded that, look, this is what it is done. It also has got a purpose that it communicates to shareholders the basis on which we are giving the report, the fundamentals on which the audit standards are prepared, and those get communicated. The fact that the professional judgment is existing is certainly important, but the professional judgment also has to be on the basis of the law, regulations, and logic. Many times when we start saying that this is my opinion, frankly to me, except for very great stalwarts in the past like Mr. Palkhiwala, none of us would have any value as far as the opinion of somebody is concerned. So while all of us are tempted to keep on saying this is my opinion, we must be able to say what is the law, what is the standard, what is the logic on which I am giving their opinion. And I think we must make it a practice to document that logic so that tomorrow if there is a need arises, I should be able to express the reason, the logic on the basis of which I reach to my judgment. Because after all, a judgment is an application of mind based on the facts and circumstances on the basis of which I reach to some conclusion. And that's what called opinion. And therefore, the so-called judgment, one has to take care of this problem. I would say that is the importance of stating why the standards are there, why they are repeated, and the consequences are that if these procedures are not followed out, I think unfortunately we end up in facing problems, disciplinary cases, etc., etc. Those are unwarranted. That's it. Thank you.
Well, Vikas Kumar, a question for you. How does the auditor deal with a case if the law or regulation prescribes a format of auditor's report that is different from the format required under standard audit?
Right. So, Samir, in my view, I think such scenarios, the auditor would need to assess the effect of the prescribed format vis-a-vis the format which is required under standard on auditing. So, if we have been prescribed one format under our standard on auditing and the law is or regulation is prescribing some different format of report, so we need to understand what is the effect of the same, what are the differences in the same. And ultimately, the auditor may need to also consider that we need to enclose a separate statement apart from the report, which you have to anyway give as per the requirement of the law or regulation. Apart from that, if the auditor feels that there is a need and there is a substantial change, then they can definitely need to consider enclosing a separate statement which will contain all the essential elements which are required under standards on auditing. And this statement should also state all the facts which are required under standard on auditing, but not mentioned in the prescribed format. So the law is giving a format which is not having certain things which are important enough, which is given by standards on auditing. So we give a statement, bring out those elements, and put that along with the report which is already there as per the required format. That is what is something which is prescribed by the standards on auditing. And I think that's the only thing which we can do as an auditor in this case, and nothing else.
Well, sir, in today's global era, there are cases where an entity is required to report its financial statement in multiple financial reporting frameworks. What if the opinion under both the framework differs?
If I understand properly, Samir, I think you're saying that if there are different reporting framework, one in India, one on outside, then how do we really deal with it? I mean,
Yes.
right. So again, in such cases, I mean, it is possible and it's feasible. And nowadays, many companies, MNCs, most of them do, and in fact, many other entities, they have two set of financial statement, one as per the Indian GAAP, which is the national framework in which they are preparing, and another set of financial statements, which is prepared as per another GAAP, which could be like IFRS or any other standard in which they are preparing it, right? And they can engage, in fact, the same auditor for doing the audit for both the frameworks. So they can, that is also being done. Now, it is for the statutory auditor, which is engaged for doing this. If they determine that the frameworks are acceptable in the respective circumstances, they may include an other matter paragraph in the auditor's report. And they should refer to the fact that another set of financial statements has been prepared by the same entity, and it is in accordance with another GAAP, whatever is the respective relevant GAAP under which that is prepared. So they have to refer that, and they have to give those details and issue a report on those financial statements. So the other matter paragraphs, in my view, should be given, which is required. And accordingly, they need to refer and tell that what is being done, and the report can be given accordingly. And if there are any qualifications arising in another GAAP, which is not there as per Indian GAAP, say, which you are doing. So what has resulted, what has led to it, and what were the results out of it can also be added in the other matter paragraph itself. That's what I feel can be done.
Well, Ganesh, sir, after COVID-19, there has been change in the ways of audit has been conducted. How has the impacted the audit report? It is about the ways of auditing, sir.
Right. Okay. So I think, broadly speaking, I think a lot of discussion has happened on COVID already, so I would not repeat many of the things. But very quickly, if we put it under some 3-4 broad buckets, one is the impact that it has had on the evidence gathering part of the audit process, right? So because of COVID restrictions, the ability to, actually cite original documentation, which may be at dispersed locations, etc., may not have been there, and therefore alternate ways of citing them through the virtual network, or through a facsimile image of those evidences. So that is a simple example. So obviously that was very challenging at the height of the COVID phase, where there was a restriction, the government imposed restriction on ability of people to move. So therefore, those challenges were very high at that time, but I believe no longer so today. But in a way, I think it has changed somewhat the way we audit. Clients have now become more, in a practical sense, more open to sharing, information in a kind of a virtual environment, thereby increasing the efficiency of the audit. But I think we should take care to strike the right balance between what is necessary from an audit perspective. Because like Mr. Chitle was also alluding, we cannot have an auditor self-imposed limitation. If you have to look at something, you have to look at something. Just because you choose to look at it in a virtual medium cannot become a scope limitation. So you have to make those judgments as to what you need to what kind of evidence that you need to gather. The second is, the manner in which COVID has impacted the different items in the financial statements. Let's say an example of that could be impairment of assets. Now, because of the, change in the assumptions and the demand supply, changes, etc., the need to assess impairment. Suddenly you see demands falling off the cliff. So you are not sure whether this is temporary or this is more long-term. It could be simple from an impairment of a particular facility to a going concern situation for the entity itself. So I think those kind of practical challenges it has, in the way we conduct the audit and the different aspects of the financial statements, which has caused the auditor to become more skeptical, more including in terms of risk assessment, as well as in performing audit procedures, as well as challenging management. with regard to some of those assumptions that they make, whether they believe, it's a temporary phase, things will come back, not come back, what the projections are, so on and so forth. So I think it has increased the challenge for the auditor as much as it has increased it for the entities themselves in that sense. And from an audit reporting perspective, naturally, it has followed, whatever has been the outcome of the auditor's assessment on these matters, whether it be impairment or going concern. If the auditor concludes in an adverse manner. For example, if there is impairment but not adjusted by the entity and chooses to modify the report, or comes to a conclusion that there is a material uncertainty because of the implication of COVID, it has had an impact on the audit reporting as well. So I think, like Mr. Chitle also mentioned, this is a once in a blue moon situation, black swan type event, which has I think taught us a number of things. Some for the better, and many not so good in terms of practical implications from a company and the auditor perspective. But I do hope all that is more or less behind us, and we can look forward to retaining the good aspects of what we learned from there, and move on in life.
Well, Vikas Kumar sir, what are the conditions under which an auditor issues a disclaimer of opinion?
Okay, I think this gets driven by SF 705, and the standard brings in very clearly that what are the conditions under which we need to actually give a disclaimer. And the key thing or the main thing which is coming into this SF 705 is that if the auditor is unable to obtain sufficient appropriate audit evidence on which to base the opinion. So if they are not able to get the sufficient appropriate audit evidence, and based on that, they are not in a position to actually give an opinion. And also that the auditor, based on what the matter is, they are not in a position to conclude the possible effects of not getting the appropriate audit evidence on the financial statements. So what could be the undetected misstatements on account of not getting the sufficient appropriate audit evidence, if they conclude that this could be material as well as pervasive? In such scenario, the standard requires the auditor to give a disclaimer of opinion. So to summarize in a manner, in a sense that I'm not able to get sufficient audit evidence, and I conclude based on the matter which is in hand that this could be material as well as pervasive, right? In such circumstances, we need to give a disclaimer of opinion. The only point which, in my view, which comes into play, which is important over here, is materiality is something which we have been dealing on a regular basis, and we determine the materiality and see that how the same is. The question was coming on what do we claim as pervasive. So pervasive is something which will have to be seen again from case to case and from judgment to judgment, that where we say that it is pervasive. And as per the standard, basically what they have been talking with respect to pervasive is which are actually not confined to the specific element or specific accounts or specific items of the financial statement. So it means that it is there for most of the elements, most of the accounts, or most of the items. In such cases, it can be said to be pervasive. And in case if it is so confined or represent or could then it should represent or could represent a substantial proportion of the financial statement. So if it is not confined, then it becomes pervasive. If it is confined, but it represent or could represent a substantial proportion of the financial statement, again, it can be called as a pervasive. Or in case of disclosures, again, it may come, but that should be very, very fundamental disclosures, which we can call it as a pervasive. Otherwise, other than that, it is spread out to the not confined, but spread out to the specific elements, accounts, or items to be called as a pervasive. And only, as I again repeat, only if it is material and pervasive, and as an auditor, I am not able to obtain the sufficient audit evidence to base my opinion, then I'll give a disclaimer. And in some cases, apart from that, also is that in some cases, maybe extremely rare circumstances, it is possible that we have obtained the sufficient audit evidence, but we are not in a position to form an opinion on the financial statement due to the potential interaction of the uncertainty. So we have the evidence, but the uncertainties are multiple. and we are not in a position to actually determine the possible outcome or the possible cumulative effect of those uncertainties on the financial statement. There could be few such circumstances in which I have to give my disclaimer of opinion. I think that's a brief. If somebody would like to add something more on it.
One common question from many of our today's audience, the term CAM and EOM all looking very similar in view of ICI. Should bring one term for both, or could you please share an example of CAM and EOM with difference? So this is a question from audience. So anybody of you can take this question.
So if I can maybe go first on this, and I'll be happy to hear views of fellow panelists on this as well. So as you know, Vikas explained, the emphasis of matter is really provided with regard to matters which are fundamental to the user's understanding of the financial statements. Whereas CAM is more focused on the audit process, not audit process of the financial statements, of course, but it is wherein the auditor's judgment, significant attention has been given by the auditor. So a CAM could be in respect of a CAM and an EOM could be in respect of the same matter. One explaining what the auditor whatever is the significant judgment that has been applied by the auditor, etc. And it could also involve an EOM. For example, if there is a let's say a material litigation, right? A material litigation which is the outcome of which is uncertain, which is very uncertain, could be a matter of EOM. Now, as part of CAM, it is possible that auditor also had to spend significant attention to that aspect to see whether he can get sufficient appropriate audit evidence on that, and what are the steps that the auditor has taken with regard to those particular aspects. So this is basically the fundamental difference. Both are not the same things. One cannot substitute perhaps one with the other. And I think somewhere the standard also says that the EOM or another matter is not a substitute for CAM. So it cannot be used interchangeably. So there are clear differences between the two. One is focused on the understanding of the financial statement. If I simply put it in plain English, I would say one is focused on the fundamental understanding of the fundamental aspects of the financial statements, whereas the other is understanding of the fundamental aspects of the audit process. In simple language, that is what I would say. But happy to hear other inputs and views from fellow panelists on that.
No, I think I fully agree with Sampath on this, and he has clearly explained the differences. So if you're really seeing CAM, you're not only telling that what are the key audit matters, but you're explaining how you have addressed it, what are the audit procedures you have done it. Whereas EOM is something where you are inviting attention to the reader to say that, look, this is a fundamental matter, which is a key matter, important matter, and you must know that. So that there is a absolutely different connotations for both, in which it is coming in the auditors.
But having said that, I think my suggestion would be for ICAI also to consider this, because I think this question many people have. So if we can actually further elaborate the implementation guide with maybe some examples or illustrations or whatever to further clarify this point, I think it could be beneficial. I would leave that as a suggestion for ICAI on this.
Well, before we conclude, this is the last question, and jointly for Chitreswar and Ganesh sir. We cannot complete the discussion without talking about the new requirements under CARO 2020 and how have the requirements under new clauses impacted the auditor and the company. Chitreswar sir?
Yeah, CARO 2020 is a reality now, and therefore there's nothing like commenting for or against it. It is what we are implementing. First point. Now, if you look at the CARO 20, I think first impression is that this appears to be meant more for the bankers than for anybody else. Because if you look at the questions, the number of questions which are asked from the viewpoint of a bank money being utilized, whether short-term money has been utilized for the long term, whether stock statements submitted each quarter have been tallying, not tallying, etc. It's a good perspective which is being obtained. Now, I think those of us who keep on studying commercial aspects over a period of time can identify each thorough question with some problem in the commercial sector in the past few years. You can identify a question and you can name it for a company which has given rise to this question. I think that's the way I look at it. Now, talking about the companies, I think a few points quickly. One was I mentioned earlier in my mention about a report under 143.12, whether report on a fraud has been made by the company or not. That was one question. I think I already given an example. Then there are the last 2 or 3 questions where on the basis of, I think while we are talking Caro, we must also add about the additional points which have come into the report arising out of rules in which it is stated that based on the 12 months projections of the next 12 months, the company shall be in a position to pay the amounts as on when it arises. Now, the whole question of this kind of a reporting is something which arose again out of a problem area in the Indian context by a company. But the wordings which are very nicely given by the institute, it very clearly states the basis on which an auditor is making the judgment and the basis on which a company is satisfying the auditor that we are in the position to satisfy those requirements. Now, this is where I think somewhere we seem to be in a commercial world moving from place to place where we identify a problem, we feel that this is the solution, but the solution is only drafting of good English in terms of what can be communicated to the shareholders at large. Because if you look at this, the projection made for the next 12 months is on the basis of what the company states. Auditors would look at it and they say we have nothing else to state whether something else emerges or not. So as an individual, I would say that these are the questions which over a period of time may have to undergo changes, because look at it only from a shareholder's angle, whether it really adds value to it or not, I'm not sure. But yes, it adds botheration and work on both sides. Botheration because you have to make a projection which is very clear, which you should be able to satisfy from the company's viewpoint to the auditors. The auditors have to look at the next projections for 12 months. And you are certifying in the statement that, look, we have seen the projection, though we do not certify the projections per se. So I think it's a double kind of a reporting which is going on. I would therefore say that as far as Caro 20 is concerned, these few questions which have been added do add up to the responsibilities of auditors in a substantial way. It's only the future which will tell us whether they were useful or otherwise. Thank you.
Ganesh sir?
Yeah. So I think Mr. Chitle has put it very well. So nothing too much to add. The only point I would say is that, or rather just as a extension of the key audit matter discussion, in case there is significant difficulty in, reporting on any of this, and involves significant auditor's attention, judgment, etc., a matter which is covered in Caro could also be part of CAM. So, I think we should also be mindful of that in case there are such matters. Auditor could look at that. But I fully agree with what Mr. Chitle mentioned, that the requirements have put a lot of onerous responsibility on the auditor. But whether this will actually be useful or not, only time will tell.
And if I can add, in fact, it can result into, in my view, certain times confusion for the reader to understand. Like I give you a simple example, if I'm not doing a listed company and I'm not doing a quarterly review, still I have to comment upon whether the quarterly statement of stock statement submitted is matching or not. Now, I am just comparing it, what is there in the accounts, whether it was done properly for the quarter or not. Even my institute guidelines say that you have to rely on that, because I'm not doing audit for the respective quarters. And if I am making a comment, in fact, even reader may get confused that everything is fit and fine, whereas it may not be so if somebody goes into detail. So it can create more confusions many of the time in my view. And in fact, some of them are duplication. Like if there are changes in Schedule 3 and the company is making those disclosures, now to comment on each and every item in Caro, I don't know how far it will be used. Like there is a whistleblower or not. If there is a requirement for company to put in financial statement, any auditor is looking upon if they are putting it in the financial statement. Now to make a specific comment in the audit Caro report, I mean, it is just adding and not adding value.
Well, Chitale sir, Ganesh sir, and Vikas Kumar sir, all of you have given wonderful insights to all of our audience. I'm very much sure that with the knowledge you have shared, they will be very useful for performing audits by all the participants here. I sincerely give thanks on behalf of ICI and to all the participants, to all of you three for giving your important and very time to us and sharing your knowledge to us. Thank you very much. Let's conclude. Thanks a lot.
Samir Ladda, thank you, and convey our thanks to Mr. C.V. Chitale also for giving us this.
Samir, could you check with Renu or Ruchika of Mr. Chitale's question, how many people are attending it?
Well, Ruchika made information or any from the technical supports from ICI. I don't have control from here.
Okay. No problem.
Yeah,
normally, no answer communicates.
Thanks a lot, sir. See you somewhere. Thank you.
Thank you, everyone.
Thank you.
Thanks a lot, sir.
Bye.
Thank you.